Welcome back to Fair Fade Investing. Today we're taking a look at NFLX Incorporated, ticker symbol NFLX. First we're going to look at some of the fundamentals, and then we're going to go into a hypothetical framework to see where the stock could be headed in the near future. We've got price per share of $584, a price to earnings ratio of 48.62, a market cap of $252 billion, enterprise value of $264 billion. Looking at the cash debt ratio and the financial strength here, we've got 49 cents for every dollar of debt they have on their balance sheet. So I'm looking for about $1 so that they could pay down every dollar of debt they had if they needed to, but 50 cents on the dollar is not a terrible situation to be in. When we look at their profitability, I see lots of green throughout their columns here. For gross margin, operating margin, net margin, and free cash flow, all margins that I use to assess how the business strength is. We see high numbers here of 41% for gross margin, 20% for operating, 16% for net, and 20.54% for free cash flow. So versus the industry, these are some of the best numbers in the industry, all except for the gross margin, which is slightly above the median, but nowhere near the maximum of the industry. Versus history, we can see that in the last 10 years, this is just about the highest they've performed. Looking into the management strength, I use return on equity, return on assets, return on invested capital, return on capital. We see here again fairly strong numbers versus the industry and versus history, on the better end for comparing to history. When we look at their trailing 12-month revenue, we see just about $34 billion versus that market cap of $252 billion. So trading for just about 7.4 times their revenues with a fairly advantageous amount of free cash flow. Looking at price to earnings ratio, we can see versus history, their median in the last 10 years was 125, their minimum was just about 16, and their current is 48. Looking at their annual financials, revenue steadily increasing and slightly decelerating here from 2021 to the present in relation to their growth that they received between 2016 and 2020, or even 2021. We see cash to debt. Debt is significantly outpacing, just about double here. All the cash pile is growing alongside the debt. In the trailing 12 months, we see revenues still steadily increasing, cash to debt fairly linear. We do see operating cash flows significantly increasing and free cash flows significantly increasing since 2022. So some good signs here. And we do see buybacks as well. So another good sign. But to get further insight, let's run a DCF to see where it could be headed. We see 4.5 star predictability. And looking at the annual rates per share for the last 10, 5, and 3-year periods for earnings per share as well as free cash flow. We do have no data for the 10 and 5-year for free cash flow, but for earnings per share we have the 10, 5, and 3-year, so I'll start off with earnings per share. Looking at the last 10 years, they've grown at 53% per year, so a significant amount of growth. Fairly unlikely for the future to continue that growth, but let's price it in anyways. So if they did what they have for the last 10 years for the next 10, then we would see a fair value of $3,153, whereas currently we're at $584. Again, this is unlikely, so let's just see what's currently priced in. So currently there's between 26 and 27% growth priced in for earnings per share for the next 10 years. And if they were to achieve something closer to their 5-year, then they would be closer to about double of where they are today, with that 35 or 36 basing it on their last 5 year rather than the 10. Looking at the last 3 years, a slight deceleration to 25. If they are to achieve for the next 10 what they have in the last 3 on average, then a fair value would be closer to 524, whereas currently they're at 584. Looking at free cash flow, currently there is just about 23% growth priced in. In the last 3 years, they've averaged 53%. If they could continue high growth like that, then obviously there's potential dramatic upside. But this is my hypothetical framework and assessment of Netflix. Leave a comment below if you have questions or want a company reviewed. If you enjoyed the video, please leave a like, subscribe, and I'll see you next time.